I'm going to take everyone down memory lane. I'm going to show you sort of where we've been and as to know where we're going. I guess you could see where we have been going. Um, and then the next conference, we have this cadence of conferences, some deep dives, and the groups are taking over those deep dives, which I love, such as Simon's doing with Future of Work. And Simon, just to clarify, you're going to want to do that on the 18th, not the 14th?
Yes.
Okay. So
Great suggestion. Thank you,
right
Mark.
after this, 2 weeks from now, he'll talk about that. Education's planning it. I know that Joe's planning something with Impact. We really do need to do a dive into blockchain, crypto, fintech. We're overdue on debt. So all these groups, as you remember, I'll just quickly flash. They're in this shared folder. Um, we've got these. Everyone's designated in a group, and I've designated a 1, 2, 3, and the ones mean I have a lot of time to give to launch that group. 2, I've got some time, and 3, I want to help, but I'm really busy. And I'll come back to that. So, and then the app, we are, I'm touch wood, I think we'll be, 200, 300 by the end of this week. And then Steven's going to talk about the update on the two sides of the corn update. And then we're going to do a deep outlook. We're going to do that next week. So next week, we're going to really talk about the public markets in depth with him and his team. And then we did want to show some spotlights, like what's happening with the new stimulus program, as well as the PPP funding. And then Simon's going to give us a preview of Future of Work. And then some of the groups do want to get together, or we could have they can do that. And then other groups that, if you just want to join a group, we're just going to continue the discussion about how you can do that. But let me take you. We do have a YouTube channel, but most of these are private. Oh, I forgot our tradition. We are going to do a quick set of breakouts, so everybody gets to meet some people. So I'm going to set it up. Where are we right now? About 35 people. So I'll set up, say 12, 13 rooms. So you can meet. Or Joe says we should go one-on-one. All right, I'll go 18, 15 rooms, and we'll come back here in 2-3 minutes. Courtney, want to go to a room? Meet somebody?
Am I dialing in the wrong thing?
You're good. They were doing the breakouts. I'll throw you into a room. You have to join a room though. Hit click. Lawrence, welcome. We're just finishing our breakouts. Everyone's got to come back here in 10 seconds.
Perfect. Thanks.
Good to hear your voice.
Likewise. Likewise.
And just like that,
That was quick.
that was pretty fast.
Very quick.
I think Mark
Quick.
just likes to flaunt his Zoom skills.
I closed the deal,
It's like StarCraft.
but I can't remember who I was with, and I have to send him wiring instructions.
Are you the buyer or the seller?
He's not
I
sure.
don't remember that either.
Well,
But it's a good closing technique.
Yeah.
Just send the wiring instructions anyway.
Yeah, rooms are closing in 10 seconds. So again, so actually so Joe, I love, Joe's always got ideas. And so Joe thought we should just do a series of these, but one-on-ones where you go all for like 5 minutes, meet somebody and we stop and you switch, meet someone else for 5 minutes. Maybe by a show of hands, is that, well, A, good, B, when do we do it? Do we do an event around that? Anyway, what do you want to
Mark, we had four
Yeah.
people in about 3 minutes. So we talked about weather. We should have another 10.
Well, maybe
No, but it's a great idea.
all right, we can,
Speed dating at its best.
That was like Tinder with no opportunity to swipe.
That's a good one.
Mark, I like the 3 or 4 groups, person groups.
okay.
I just find that to be more enriching if it's a little larger.
I think
Mark,
you're
you
afraid to be stuck with somebody. That's the problem for 10 minutes.
No, I mean it's just more inputs for all to consider.
Yeah. Okay. Simon, you want to
I'm
say
fine
something?
either way. Whatever you want to do.
either way as well.
It's like your table at a wedding.
All right, I'm gonna mute everybody again in a second. But Simon, you want to say something before I move on?
Yeah, Mark, just as an idea, normally, as one of our friends said, in the first 3 minutes, only thing you can talk about is the weather. So maybe you can throw some topics on top of, connecting the groups.
Yep. You're going out there, Simon. Well, look, I'm gonna mute everybody and go back. Some people missed the the first part. So we're just gonna reflect. I want to take everyone down memory lane, where we've been, and then where we're going. And then Stephen's gonna take it over on a macro, and then we'll the spotlights, and then we're gonna talk about the groups are gonna get together. So this is
People, this topic to be discussed as some other.
okay. This is where
Is it
we
better now?
we're no, not yet. I'm still gonna show some things. This is March 19th, our first larger web conference.
Annual, it feels like a first annual webcast focused on impact and next gen. We're in a fog of the virus, which I think we'll all get out of at some point. We just don't know when or how or what the world looks like. Stephen, help us understand where we are in the markets.
It's a unprecedented time in the world. The last pandemic we had of this magnitude was in 1918. If the government takes the right steps, and fiscal policy is going to have to step up in a much more meaningful way than people think.
I want to just say thank you to Mark and Joe and the team for having me and for sort of pushing through and still holding this presentation, this webcast. I think it's great.
Real photograph sequence from 1984 to the present, where you see what one road cut through the Amazon jungle does.
We've got a lot of smart people on this call and in our network. We're going to dedicate in a couple of weeks' time an event that will focus on.
So then we did that event, and we started to do a few deep dives. And And so at the end of
Welcome
May,
to the 361
here we were.
Firm and Alumni Connecting joint web conference on restarts.
Really the focus of my discussion today is that on balance, the recovery/expansion we believe is going to be driven by the investment side of the equation, in particular driven by onshoring, which is going to be a major support for capital spending and also housing. So here I just highlight some of our main themes, and we watch things very closely.
The automotive industry has expanded and grown within Ohio.
We're more of a startup than a restart, but a typical startup doesn't have a 6 million square foot factory and a prototype vehicle.
So yesterday, it was announced $550 million SPAC deal with Steve Burns' company. So they are relaunching. And then examples of deep dives, which I want all the groups to do. This was one of our first media and sports.
The content wars are escalating. So this is going to be a great situation for filmmakers and for artists. So as the industry recovers, we're all looking like Fat Thor right now. And what we're going to be seeing, and we're already seeing, is the industry is beginning to reduce some bloat.
And I've heard the stories about Lawrence Taylor at the Giants. It was hard to keep him in camp for one night, for that matter. So
that was,
the content wars.
That was Charles Way on whether we would be able to put sports people into bubbles. That was early May. And then we had the last event. We started doing these principals and CIOs, and there was a little interaction. Maybe I'll switch up. Todd Rupert was on. He was the T. Rowe Price global president, and then new members like Amit, I think, is on this call.
Thank you. Good points. So Amit, we only met last week thanks to Billy Weston. Do you mind? You're sitting in London. Introduce yourself and how you see these macro forces or other forces.
Absolutely. Pleasure and good to be introduced to everybody here. A very high level, we are a London-based multi-family office with a family office for 13 families split between Asia, Switzerland, and the UK. We basically manage a very active liquid platform.
But my favorite is when we do the town halls, the debriefs. And this was last week.
It was an interesting group to get everyone together in. I think there's a lot of different perspectives. I think the conversation ended up centering around blockchain a lot. And
of course, I come from gaming and esports, which is actually not that far off from cryptocurrency, because crypto and blockchain is not really its own sector, but the backbone of many sectors. I'm the one who said that trust is a currency. And when you're dealing with my generation, which is Generation Z, trust goes a long way.
Blockchain's really about enterprise. And in ways where consumers can touch it, they actually might be touching it kind of in dangerous ways right now through like risky loan programs and those kinds of things. And so, the real opportunity is probably not there.
Let's go to ag and cannabis, which sort of.
I'll pause here because I think what Jen's going to talk about is what I would like to see all groups do.
They're sort of intertwined there, right?
Yeah, and so we're going to also split the speaking part. So I'm going to just suggest, in terms of the types of events that we would like to sort of curate within the ecosystem, we're thinking of potentially like one way to bring in more folks into the ecosystem is to really tap into our networks across ag tech, cannabis, hemp, and even cannabis hemp, and maybe even some F&B, and create a monthly series.
So, I played that so that we think about what kind of things that all of you want to do. We try to set the scene, and I'll just, and all these videos, by the way, are on the app. So you have to actually be on the app. And you can see Stephen Burke's presentation. You can see other presenters in more detail, as well as Lisa Coleman from NYU, Adam Weinberg, Denison, Oscar, and Brett. But this is an image that I just imported, so it doesn't look really good. But and Simon, this is what I want to refer to you. These circles are 2 years ago in my mind, family offices with some connectors connecting us. And then we have the fund managers bringing us deals or families bring us deals. But I also see these circles can represent the groups, and the groups can interact and basically, you know, have joint events and all the rest. So again, the next big event is on the 16th, 17th. We're going to stagger it over 2 days. We were supposed to be in London, and we will get back to in-person events. But here in London, we're going to start in 2 different times to get time zones. You know, bring on Asia, even do a recap for Asia, as you can see, and then, you know, again, emphasize on the alumni. The alumni will be the start of the second day. So all that said, and then we're hoping to do, and I don't have confirmed, is to bring both the futurists and the data together in a longer opening panel. I think that was one of the feedback was, okay, you know, the breakouts, when I made them an hour, they seem too long. When I make them 30 minutes, they're too short. So we're going to try to make it 45 minutes, make the panels a little longer, and having it over 2 days, unless people violently disagree with that concept. So again, back to how I just wanted to also give you as an update on the app. Actually, I think you'll see it's a pretty dynamic thing. We can make many changes to it. So if anybody has suggestions, please let us know. Groups we'll talk about later. So before I hand it over to you, Stephen, does anyone have any questions or suggestions or reflections?
It's Rob. Just how are you mixing domestic versus international type of content and sort of participant input?
Well, if you remember, being an Arthur Andersen partner, the whole idea of one firm was from my time with Andersons. I think that's what makes us special, and that's why I wanted to go to a 2-day. I really want all these groups. Like we have emerging markets just started. LATAM. Eventually, it'll go to Colombia, Chile, Venezuela, but until we get strong as a cluster, we won't go too granular. But you spent 3 years in Africa. You've got a great network there. Marco's got family all over Italy, so I have to get him we have a lot of connect. I was just telling him, he should meet Fabrizio Bentivoglio. I want this to be diverse and global. That's the point, because I think what's beautiful about that, once you have it, is take Anil Ranadiv. His father owns the Sacramento Kings, and he's doing venture. He's putting $100,000 into every Y Combinator graduate company. Now he's got tons of deal flow. Now he's creating fund 1, 2, 3, but he sees, it was Uber, then it was Grab in Asia, and there's a Latin American equivalent whose name I forget. It's having that connectivity, having people to call upon is critical. And I think we can be helpful to each other, whether it's investing or expanding our operating companies, all the rest. And any other questions or reflections before we move on to macro? Okay. So I'm going to hand it over to you, Stephen, to enlighten us, and then we'll split back to a few spotlights, and then I'll finish off on how we hopefully go forward with it. I'm just trying to empower all the groups to take flight. Stephen, you want to take over the screen?
Yes, Mark.
I have to stop, I think.
Yes.
Later.
Okay. Thank you. And Mark, it's fascinating what you've been able to do since the pandemic started and how you transition your business. And it's really remarkable how this group continues to meet on a weekly basis, and what you've done and the quality of the team that you brought together to do it. So thank you.
I can't believe you've done this 17 weeks in a row, Stephen.
that makes two of us. I can't believe they're coming back. It speaks to how good the rest of the content is. So today I wanted to talk about two sides of the same coin, because for all the good that's going on, there seems to be a lot of bad. And I just wanted to point out from an article in the New York Times today, on New York City, they said that 2,800 businesses have closed since March 1st. Over 500,000 jobs have been lost. And they're projecting that of the 240,000 businesses in New York, a third might not reopen after. Yet on the other side of the coin, Apple is closing.
Do you mean to be showing anything on your screen?
Not yet.
Okay.
Apple at this point is closing in on a true $2 trillion valuation. The NASDAQ's closing in on 11,000. Gold is closing in on 2,000, and Bitcoin's back up around 12,000. So it just shows you how perverse the world is in terms of being on both sides. Today, I just want to touch on a look at some of the GDP and PMIs around the world, talk a little bit about the dollar, and update on the deflation inflation with some a report that Nancy Lazar's team put out yesterday, because that's always been a hot topic here. So looking at the manufacturing purchasing manager index around the world, and I have China, the US, the EU, and the global. And what's interesting, if you look at...
do you mean to be showing? Okay, there you go. Now you are.
I am? Okay.
No, you're not. You're not sharing anything on your screen, at least for me.
Okay. I'm not sure why that is. Hold on a second. Okay. It should be showing. Is it not showing now, Mark?
No.
No? And I did all these slides for you.
Wait. I'll keep going. I'll grab them.
You want to pull them up?
Yep.
So I was just going to point out the PMIs from China, which was the first one in April, only was still in an expansion territory, which shows you that China's rebound and their ability to shut down and reopen was quite strong. It's now at a 52.8 level. If you, which is expansionary. If you look at the US, we hit a low of 26.7 and they're now back at 50.9. The EU hit a low of 12 in April and is now up to 51. And the global PMI hit a 21.5 and is now up to 53. So a lot of expansionary stuff going on, but the damage has been quite severe. So if you go to the next slide, Mark.
Well, I don't have anything up yet.
Yeah, I have it up. Okay.
I'll get it. Almost there.
So just in the impact on real changes in real GDP, China's at a 2.5-year low, was where GDP is now relative. The US, we're going back to a 5-year low. The Eurozone is at a 15-year low. And Italy, which has gone through some challenges over the last decade, is at a 26-year low in real GDP terms. So on one hand, you have the manufacturing doing well, they're coming back, but we're still not close to there yet in a lot of the areas. And some countries have a much longer road to go. I also wanted to touch on the dollar, because the dollar's strength is always a positive and then it's always a negative. I think right now we've seen a big change in the dollar, and that's a positive for the global economy and for a lot of US companies and probably for the S&P overall. To have a weaker dollar. But what's interesting is the US accounts for about 88% of currency transactions, the US dollar, around the world today. And I think over $6.6 trillion of currency transactions are done in dollars on a daily basis. So as the dollar goes, so does a lot of things, which is why the Fed was so active in printing money, so there was not a dollar shortage in the crunch time. But this move back in the dollar takes a lot of pressure off the global system, particularly the emerging economies, and softens the debt burdens that they have with the weakening. So we could expect some continued weakness in the dollar, in large part because of the success of China and the success of Europe coming out of the pandemic. And the US is still lagging in that area in our view. So a softer dollar is not a bad thing. It's nothing to worry about. And it actually has a lot of positive benefits for the global economy. But it is something that really needs to be kept an eye on. We don't think it's a permanent change. We think it's a healthy change. And when the dollar gets too strong, we start to get concerned. So this softening of the dollar is a good thing. And then the last thing I wanted to touch on was the inflation and deflation. So we missed all the slides. Sorry, Mark. I'm not sure where the disconnect came. But inflation, deflation. So for those who've listened for the last couple months, we've been of the view that we're still in a more deflation-prone economy with some possibility now because of all the supply chain shifts and other changes going on that will have transitory inflationary pressures. Nancy Lazar's team, who does a really good work in the fiscal and monetary policy area, their monetary policy person worked at the Fed, and he came up with a view that we're looking at pre-COVID deflation risk of only 7% and inflation risk of 45%. And what a change in a couple months. Their deflation odds have gone up to 55%, and their inflation has lowered to 23%. And it speaks to some of the challenges that we think remain in the system and why the central banks and fiscal policymakers will likely keep pouring it on. And just think the gap between the $1 trillion for the Republicans and the $3 trillion of stimulus for the Democrats coming through will likely end up, in our view, somewhere around 1.75 trillion of additional spend coming into the system to support it, which just speaks to the damage that's been done. And when Mark showed that tape from back in March where I said fiscal policy is going to be on what people can believe, I think we're seeing it now with this next round of stimulus that's likely to come through. And we can argue whether it's necessary or not, but when you look at some of the numbers I talked about with job losses and potential business closings, we may find that it's a lot easier to save the patient than to try and start anew. And I think that's what we're going to continue to see. So we generally remain balanced on a more positive outlook. We're worried, like everyone else, about the reemergence, but we're think that the assets are still going to be pushed up, which is the part of the plan of central banks around the world. So there are a lot of positives and negatives. We're seeing it in the sports world with the starts and restarts and the like. And we think we're going to be in a fits and restarts kind of period for some time. So we're generally skewed positive, but there are a lot of risks out in the system. And I'm not supposed to say this from a conversation I had earlier, but the weather we're seeing on the East Coast and the Northeast right now, we worry is a foreshadowing of the higher water temperatures and perhaps a very difficult storm season for the fall here. So I think this might be the first of a couple, and we should just be prepared for a lot of volatility that comes with that. And that's even before the election. So thanks, Mark. I'll turn it back to you and take any questions.
Great,
Stephen, I've got a question actually, if I can.
Yep.
So I remember in one of your earlier outlooks, you kind of mentioned that the dollar losing its reserve currency status would really kind of impact the way you guys are viewing the world and your bullish sentiment. What would cause the dollar to lose its reserve currency status, like in this environment? What would, unhinge that?
Well, it would basically be that we devalued too much relative to everyone else, and that people find alternatives to move away, and we just don't see that coming yet. But it is something we monitor all the time. It's not a near-term issue, it's a longer-term issue. And actually, if you look, Mohamed El-Erian was on CNBC yesterday morning, and far brighter person than I, and his view is that it's not a concern in the intermediate term either. I think it just depends on how all the countries manage this crisis and what the debt burdens that are resulting and the fiscal position of countries faces after. And we just don't see the U.S. declining in its relative value at this time.
Stephen, I got a question for you, and the wider group. Do we think with all these money being poured into economies, I lost count of how many trillions, are we on the way to basically throwing out all the, economic theories and thinking, and basically being in the government run or controlled economies where the government tells you if the inflation coming or deflation is coming, and the economic forces don't mean anything anymore? Because with all that money being spent, you would think inflation should be on the horizon and worries about debt, but yet, as you just showed, people more worried about deflation than they are about inflation. Are we basically no longer in the free market economy and basically being run by governments printing, telling, how economy is going to proceed?
I don't know that it's time to call it quits, and I did see some people are definitely of that view. I did a call with a bunch of doctors last night. When they asked about that same issue, I said, it's like a patient coming into the emergency room. You have to pick what you're going to cure first and to save the patient. So I think there's an element of the government involvements that's absolutely necessary right now. How we deal with the fallout from that, there'll be negative consequences as there always are, but we're clearly sending, as we wrote an Outlook about 2 years ago, where we were worried about that we're all sending the bill to the kids' table and let them deal with the problems. I think you have to worry about deflation, and that's the number one concern of the Fed. There are cures for inflation. There are very difficult cures for deflation, and that's what we're battling right now. So I think the governments are all of a mind that avoiding deflation is the paramount issue, and getting through the pandemic and then deal with the problems that we create by solving the problem later.
Can I add something? I love this question. I'm sorry, I don't see the name of the gentleman who asked it. So I would suggest that there is a very interesting trend, and it started at during the time of the first crisis in 2008. And I remember when I was writing a book on the crisis, I just noted that all the ideas which I learned in the business school about the structural finance were not valid anymore. So if you think about it, from my perspective, we're in a territory which is completely methodologically uncharted, because nobody could foresee the deflation coming, and deflation means that interest rates are negative. And the politicians normally are very sensitive to these issues. They not necessarily understand them, but they suddenly realize that the entire theory of corporate finance, all the basics of the free economy, which we developed in the past 50 years, are out, and they started using it. And the repression about which Stephen spoke, the financial repression, is a completely uncharted, methodologically uncharted territory. And for you to appreciate where we stand, you need to look at Japan. Once Japan ended up in this devaluation mode, deflation mode, has never came out of it. But there is one very interesting thing, and Stephen can talk about this much more, is the concept of deflation. And that is a very political thing, because people don't discuss it, but deflation is a tool, inflation is a tool which is used by all the governments against the people. And the way it works is that you formulate the concept of inflation, you decide which baskets go into inflation. So we, as an example, in 2011, the UK switched from its original way of calculating inflation to the standard for Europe, and inflation dropped 1.7% the same day. 40% of inflation dropped the same day. So what we're talking about, deflation helps the governments not to increase the budget deficits. They basically deflate, or they basically don't allow the population to have the previous purchasing power.
Simon, I just want to keep it going. Is it going to wrap that point up?
Please.
Does anyone want to respond to that?
I just would add, Mark, that the deflation is like the third rail. Nobody wants to touch it. Nobody wants to talk about it, but that is the fear. And if you read the Fed's remarks lately, they're basically saying that is their worry. And that's why they have very few plans they're not planning on raising rates, and they're actually talking about changing their inflation expectation targets. So instead of what they normally would do is try and get ahead of inflation, they want to see inflation because they're so worried about deflation. And I think that's the concern around the world. So I think there's a real issue to to be had there. I think the other issue is who's going to step up and be the reserve currency if the dollar isn't. And there have been a lot of attempts to replace it, and the dollar's not permanent in its position, but it'll take some dramatic changes in other currencies to get past it, and that's would be our view. And that's not near term, but it is certainly something in the longer term.
Stephen, so Marco Soriano wanted to introduce someone new to the group, maybe on this point.
Right.
Marco? Or Raphael? It was Raphael, is who he was referring to. Eric Raphael? You're both on mute. Oh, there he is. Eric, did you have a point?
Oh yeah, here, am I coming through?
Yep. Yes.
Yeah, no, I appreciate that. You know, just as timing would have it, I had my my 4-year-old barge in here, so I apologize if I was I actually missed the last point. But Marco did ask me to chime in. We think you know, there's just so much happening today, perhaps versus any time in history. There's just a major trend in. So whether it's, you know, we've got very healthy Gen Z right behind them, 180 million strong, aging into their peak earning years, but very positive tailwind. But obviously there's also some headwinds, and we've got a climate with challenges and opportunity, onshoring, which I heard mentioned before, the enormity of the current stimulus, and then the role of fiscal policy becoming more prominent. And as I heard someone else alluding to the need, you know, relative to monetary policy going forward, gap between growth and valuations, and of course the unprecedented wave of technology and innovation that's before us. So all of this, to me, and tower firms suggest that the difference between performance in the winners and losers, public and private, we focus more on the public side, is has been.
Sorry, just could you let people know what we is? You're managing.
Bank of America Merrill.
And your role there is, Marcus said you're managing about $1 billion as well.
Yeah, we do private wealth. We do large composite of separately managed account and publicly traded securities. And then we also have obviously a pretty robust private markets platform. But the point is, and I apologize for going long-winded, but the main message here is with all of these major trends, we're all aware of these factors. The gap, the dispersion in performance between the winners and losers has never been bigger. And we expect that to continue. And so the debate on active versus passive management really comes to the fore, where for decades there's been a major shift of capital into the passive indexes, and we think this is probably the best time, perhaps ever, to be in modern history, at least to be an active in the business of active management.
Well, welcome, Eric, to our group.
Appreciate that.
Anyone else with a comment or question?
I've got a quick comment or question. Steve, it's Rob. First, I'm in the Mid-Atlantic, so we dealt with that hurricane passing through last night. So I'm happy the power was on to make today. So thanks for mentioning that. I think it's going to be a busy season. Last week you talked about the Kodak deal. That was interesting. It converting into sort of the manufacturer of pharmaceuticals and sort of the $800 million loan from the government. Do you see, Stephen, more of those deals? And out of curiosity, was that internally generated, or was that some sort of McKinsey type of developed project for them?
I'm not sure how it was, who came up with the idea, but I'm also a little disappointed that the CEO got a big options grant within a week before the announcement. But listen, I think companies are desperate, and I think the government is trying to reach out and trying to figure out how to fix some of the vulnerabilities that we have. So I think there are going to be opportunities for public-private partnerships like this that help solve issues that countries have to secure what they need for going forward, because we're in a very unstable geopolitical situation as well. So I don't know the answer to that, Rob. I'm trying to find out who was the driver behind that.
Anything else? So I would like to turn, before I give it to you, Simon, Nate, we met you in Nate Rice in Phoenix, and you had a venture. Now you have a new venture, fintech. So you've been interacting with a lot of these banks on the PPP aspects of the stimulus. Can you just give a quick, like, what's happening there today?
Sure. You know, as Mark mentioned, being a quintessential entrepreneur, seeing a opportunity or very big problem, you know, with opportunity and problem with $600 billion free dollars, but all you got to do is get to the bank to go get it, and 40 million businesses that qualify, all quarantined in their house. Seeing an interesting opportunity and an opportunity to help. Was that, as I mentioned, have another venture. This was one that was a pretty good use of our time. And so what I'll just kind of touch on a few high points, and I can be available to talk to anybody after this. So that, I don't know if everybody on the phone is probably familiar with the Paycheck Protection Program, probably has gotten some money. I am sure that there's a lot of money this group has probably left on the table, based on kind of some of the parameters and of the program in the bank. So I'm not sure who had mentioned on here, maybe it was Stephen, about the number of businesses that have closed in New York and most likely not to back open. So I'll come back to that one in a second. So there's a likelihood, I'm just going to touch on a couple things, the likelihood that it will continue. What it looks like, and from what we are hearing, pretty close topics of what is coming next, and there will be something next. The problem of money, you know, just has not made it to the areas that is meant to go, and then you know, just kind of what are some of those things that are causing that. So as far as the program, again, I don't have a perfect crystal ball. But being an election year, and with only, so roughly 5.1 million businesses have received PPP funds out of 40 million. And, you know, a majority of those don't have employees. And based under the program as well, there's an estimated 120 million businesses when you break down independent contractors, Uber drivers, that also qualify for the program. Which have not received any funds and have actively been, when I say actively, I legitimately mean actively been excluded based on a big, let's call it a bottleneck, right, with the banks. So there's again, from a likelihood to continue, money hasn't really made it to the groups, and there's kind of there's a couple of elementary problems with it, and there's a few other ones that are a little more bigger hurdles to get over. But from an awareness and education and a distrust amongst minority communities, it's showing to be a much bigger problem than you know, and being able to penetrate these communities based on two factors. The way that the pricing was put forth is, you know, banks, I don't know if you guys really know, but banks are compensated 5 points to originate these loans. And when they've been very, very tired and fatigued after doing $350,000 loans, there aren't a whole lot of banks or community lenders excited to do loans $20,000 or less. And, you know, that's a good majority of all of the groups that really can make a material impact to the community business, to the restaurant. And
60 seconds. Keep going.
Yep. So again, I could touch more on that. I guess with a couple seconds, I would say what we're seeing coming next is a two-prong opportunity, a multiple of revenue that is coupled with a second-tier dip. They're talking about 2.5 times revenue, the ability to be able to get that on a 20-year note, 20-year loan, great money. And then the second round of 2.5 months payroll forgiveness. And then for this group, I would just say, pay real attention for the rise of some fintechs that are going to come in here where people are really upset with their banks, and the ability to kind of bridge that gap and show there's going to be some really big winners that come out of it. And I'm available for anybody to talk about this more in depth afterwards.
Great. Any quick questions to Nate on that subject? Marco, I know that you've been active in tapping that for the hotel industry. You maybe want to make a comment there? You may be on mute. All right. Well, if there's nothing there, Simon, I'm going to give you the floor for the balance, or at least by a few minutes, just to talk about what you're going to do on the future of work, and the kind of you intersect with so many groups that I think this could be a interesting way to rally lots of groups into one event. Do you want to take it from here?
Yes, thank you. I will be very quick. I believe that future of work is something which all of us are thinking every day. And the problem is that our thinking is not framed by other things. And future of work is this thing which is important to all of us. For instance, we plan to have a panel on implications of future works for parents, because all of us ask ourselves the same question: what our children should do, how they should get prepared. And basically, they're asking themselves the same question: what is the future of work? What is the future of that space where kids will exist? This is a very important question for the society as well, because the crowds on the streets, which we see right now, they're asking the same question: what are you going to do for us to be employed, for us to have a good life? Again, it's a question of future work. And at the end of the day, when you talk about businesses, you suddenly realize that if you want to have a strategic vision where you want to move your money, you actually need to answer the question: what is the future of work going to be? Because it touches so many issues. And here I'm basically showing you all these interesting conjunctions which lead to the space, this methodology, this framework to becoming something which leads us to answers as opposed to just questions. How is it going to be in the future? So on the 18th, we're planning to have a panel. I have kind of confirmed soft commitments from the gentleman who was already our guest, who is the leader of this section at Singularity University. Everybody probably knows what it is, but for those who don't, just dial up and you will understand that it's one of the think tanks which formulates vision of the absolute intellectual elite. I think a week of training there costs about $150,000. So this gentleman will be with us. We will have probably the head of this theme at Facebook, which, as you can imagine, is one of the thought leaders in the space, and also about Luft. So we'll cover at least 3 big intellectual approaches. We also will have 2 people who are coming from the industry and who are coming from kind of sociological approach to the project to get around that. I think that it is important that all of us kind of get educated. I know that many people, many of my acquaintances don't know this term altogether, which shows that it's a disruptive term, because the magnitude is immense and most people don't know. And I would like for all of us to be aware and maybe use this methodology. And I look for help from anyone, because basically this group may grow into something which will be unique for this platform and for which each of us showing us what we should do next and what our kids have to do next. Thank you.
This is Gary, right?
Yeah, Gary. Gary is from Singularity University. And thank you, Mark, for putting it in the format. You decided not to risk with my first slide, right?
Actually, I couldn't find So
Okay, because I deleted it. It was very controversial. I just wonder if people would accept it. But
No worries.
basically, the slide had two pictures: one of the statue of Lincoln in Boston, and another statue of Lenin in Seattle. And the name of the slide was "It is our choice where we'll end up." And the choice is basically the way we formulate the concept of future work. Okay, thank you, everyone. Happy to answer the questions.
So if anybody wants to get involved, I think what you should do, Simon, is probably, well, two things. You can either go to the Future of Work group on the app, which you can,
I will,
which you can all see, or you can just reach out to Simon. He's also on the app. And Simon, what I would suggest is I think you're trying to define an agenda to, that overlaps with education, real estate, venture, blockchain, fintech, all the rest. So it's you want to sort of shine lights from all those directions.
Yeah, absolutely. Our objective is to give exactly a voice to every new movement. And Singularity University actually has a database of 3,500 startups, which are in different areas of the space. And we are thinking how to integrate the startups in our discussion on Tuesday, the 18th at 11 o'clock. So everybody is welcome. Bring your friends, popcorn. We will serve the intellectual food.
Really, all you group leaders out there, I'm looking at you, Francis, on Asia, Gene on healthcare, Vlad on Ohio, or future group leaders, people like you, Dominic, Zoe, on, during the blockchain discussion. So, we want the tool set that we have is partly, one, the app, and two, just like the education group after this call is getting together, we sort of kicked it off with a briefing on education on July 7th. And that leads to a stepping stone of an hour and a half. It could go even further, but I can't do it. Really, we should be having tons of events with this group. A lot of interaction, connectivity, but it has to be really be led by you. So we are a canvas and a tool to be used. So whether it's Dimitri's interested in credit, or Adora, you're interested in accelerators and tech, we're here to make this work for you. Questions, comments? It's all perfectly clear.
Thank you for setting it out.
So now there's no excuse. The only excuse is time zones, right? So what I did to accommodate you, it's like almost midnight for Francis. Everybody's sitting in Beijing. But as you can see, at least and I look at these conferences as really, again, stepping stones. They're not, you don't have a chance to really get into the nitty gritty. That's where these deep dives come from, or that's what they're for. And, the group to have interaction between deep dives and events, which you can do offline, you can do on the app, you can do wherever, just trying to help facilitate it.
Hey, Mark, this is Gene. So I didn't completely follow how I would set something up, and maybe I'd be glad to get offline with you or somebody on the team to figure out how to set up a group, a healthcare group.
It's already set up, but and you can go in the app and start inviting people to the group. You can be on it, interacting. You can go into the main feed to invite people. There's also, as I would point out, there's some parallel universes. In that we have LinkedIn groups as well. And to the extent that you can, if you have a specific idea, at the end of all of these weekly briefings, we're sort of setting up time for you to get together with other people. So if you think of 12 o'clock on Tuesdays, when the groups could get together. But
that's great.
Maybe what I'll do is I'll make it very explicit. Like if you want to be a group leader, Like, here are the 10 things that we're here to do for you.
Great. Yeah, I'm just getting the cadence of the Tuesday meeting, so that would be great. And I haven't spent enough time on the app, so that would be great. So at least I have a couple things to follow up on here. Thanks.
Sure.
Looking forward to it. I think it's timely, and there's I've had lots of great conversations with folks on healthcare issues and opportunities, and there's obviously a lot going on.
You're making me. I couldn't include everything, but there was I could flash a video of you on March 19.
That's all right. My younger son.
Go ahead. Who else has a question?
I just wanted to say I looked at the app. The UI is pretty good. I was surprised. Not that I should be surprised, but I'm saying building apps are not easy. It looks pretty good.
No, I think you meant to say you're really surprised.
Oh, maybe.
You're my bar we're trying to hit.
Yeah. No, that's good.
Gene, I just sent you an email, and so that we can connect offline.
Yeah, Barry, we've been trading emails. Looking forward to connecting, especially on telehealth. Thank you.
Yeah. So I'm looking forward to it.
A lot going on in telehealth. Executive orders yesterday were pretty interesting. Telehealth and FDC and broadband and interesting stuff. A lot going on there. I'm involved in a lot of stuff, so I want to connect on that.
Other questions or comments, but the good takeaway. We will come back to you on the for group leaders more specifics. If it's not, I thought it's intuitive, but it may not be for some. And but and partly the idea of our September event is to keep recirculating, interconnecting, and letting these groups get together and having sort of planning sessions for themselves too. And to your point, Rob, really what I wanted to do is to have we've been doing it by industries and assets and then alumni. We could also we've done it at the Harvard conference. We did it by regions. We had an Israel breakout. We had a LATAM breakout. So different ways to do it.
Yeah. Thanks. I mean, if you got like Francis from Asia, having the perspective from on the ground it's great having that unfiltered type of inputs. And then I think your Christoph, when you have him chime in from Africa, that was interesting. So you got the cluster there, and you could combine that with those that are sort of either geography or sector centric from the U.S. or North America, and it's a nice best practice sharing.
But I don't want to underemphasize, but the history of this is coming from alumni, so that is now working. It's becoming a feeder, and so wherever Francis, for example, University of Chicago, Rob, your UVA. I now I'm starting to memorize it where everybody is. So, well, thank you everybody for your time. Again, next week, actually, I'll contradict myself, but we will have at 12. We're actually moving into an outlook to go talk about macro. So we'll figure out the cadence. Maybe it'll be 11:30 for the groups next week.